Good morning, friends. This is time for the trade plan for 17th of July 2020. Now, yesterday we had the expiry and the markets, rallied into the close and finally, that 10,550, 10,600 zone held up for a bit. Now, what is happening globally? As you can see with the SGX, that is up about 40, 45 odd points. And in the US market, basically, we had a consolidation style bar and the market's kind of moving sideways. Now, this is S&P 500. I think a relevant chart right now is the NASDAQ chart. NASDAQ is probably the weakest of the lot here. So, as you can see, the markets are kind of sideways. Okay. On the Nifty, we had drawn a certain range and the Nifty found support exactly in this range and has rallied up. Now, the question becomes, we have been range bound basically from this zone. We broke down of this from this zone and now we are back into this zone. So what you can say is that you are basically in this range other than these few bars which were outside this range. Now, is this a consolidation or is this a breakout? If you ask me, the market is very, very tightly range bound. The other thing is that if you see the FII data, FIIs have been selling for last many days. Sure, DIIs bought, but why are these guys, they are selling fairly large quantities on a daily basis? You see, the last time this happened was at 12,000 to 12,400, and we saw what happened later on. So things are tricky, and if you see here, what is happening is that we are getting highs 9,800, then 10,300, then 10,500, 50 thereabouts, and 10,850. Consistently, the highs are only marginally higher. And if you go back and see what was happening in this 12,400 zone, you had one high, 12,140, you had another high, 12,160, you had another high, 12,290, then you had another high, 12,436. Something similar is going on out here. So the sense is that for the moment you seem range bound, but I think the market cannot stay in this range for a long time and will finally come out. So for the very near term type of people, you have boundaries. Those boundaries are 10,600 to about 10,850. I am not taking this smaller range because the market is very freely going up and down. But basically, if you see it from a perspective of uh, analysis, there is a smaller range within that large range. Now let's see what is going on Bank Nifty. The Bank Nifty, we had marked out a certain range, and even that has climbed back into the range that we had marked out. Let's look at the daily chart of the Bank Nifty. Bank Nifty is fairly weak, and while we have bounced back from the lows, it's nothing convincing. Okay, a 250, 300 point rally on the Bank Nifty is not great news. For me, also, it's relevant that we are now trading at a discount on Nifty of about 25 odd points. Bank Nifty, we are trading at a discount of about 80 odd points. In a market that is going up, why these discounts are getting created? Okay. So this is very relevant, something that people should think about, because obviously somebody is selling as the market goes up, because as the market goes up your discount should vanish. Instead we are seeing a reinstatement of these discounts. Let me show you another interesting thing. Let's look at the Hang Seng chart. This is the Hang Seng chart. Post this high, it has been consistently going down. Okay, so there is no follow through from the US rally. This is the Nikkei chart. For last 2 or 3 sessions, it has not been able to cross this June high. Okay. This is the Kospi chart. Again, there isn't great momentum. Let's look at the FTSE chart. Again, you can see there is very poor momentum. This was the June high, and we are not able to follow through. We made some highs which are pretty much in line. This is the French index CAC 40. Again, you can see there isn't great momentum or enthusiasm to cross on the upside. The DAX has made a fresh high, but not with any sort of convincing manner. So, what this means is that if you have a Nifty which is being taken up by three stocks and the rest of the stocks are not showing momentum, you would obviously suspect that move. So, in the global market, there is very little momentum which you can see based on the US market action. So, that is something to keep at the back of your mind that we are probably getting into some sort of a consolidation. Now, what is a consolidation? Consolidation is a sideways type of move which will have large plunges and will have some rallies also. So, what I am interested in is that we should get below the 20-day moving average, and from there we start a rally. Because if we are still hanging around here and momentum keeps dropping all the time, I don't think that is a great situation. Let's have a look at our MACD. This MACD histogram is falling below zero while the market went up yesterday. These lines, the signal line is now trading below the average. So the market is losing momentum. Okay, let's have a look at the momentum on Bank Nifty. Again, trading below the signal line and uh, sorry, the zero line and the signal line is trading below the average. Okay. Let's have a look at our Reliance chart. Reliance has also gone below its zero line and the signal line seems to be crossing below the average. Okay. Nifty IT. Look at this bar on Nifty IT. Gap up, shooting star, did not maintain the highs. So from all sorts of perspectives, it's difficult to imagine a great amount of upside. And if the market cannot show great upside momentum, then the odds are on the downside. So the view for the next few days is that if we are not able to cross this 200-day moving average in any sort of hurry, the market is likely to again move to lower levels. For today, you could be having a ranging type of action, and again, I would look at the three components: Nifty, Bank Nifty, Reliance, and CNX IT to see which of the two are on the bullish side. And if the majority is on bullish side, you take a bullish view. If the majority is on the bearish side, you have to take bearish view. But my slant is towards the downside. I think the market lacks momentum to take higher levels out. From lower levels, it did show you a bounce back. But let's see what happens at the higher level. Now, as far as the pivot levels are concerned, we have support at 10,626 to about 10,670. We have resistance at 10,756 to about 10,800. Now the pivot points for today are basically facing the pivot point from yesterday. R1 and S1 are also fairly similar. So today the expectation is of a sideways day even from the pivots. And on the downside, you have 21,229 as a support on the Bank Nifty to about 21,400, and you have resistance at 21,742 to 21,913. Just to take a view on what is going on weekly pivots, let me just show you. The weekly pivot is 10,756. The weekly R1 is 10,854. So basically your stop for short positions is 10,850. Okay. So on the Bank Nifty, again, the weekly pivot is 22,518. We are significantly below this. So the idea is that we should at best expect sideways and at worst expect a downside. So I would call this a sideways to downside market, and that is the view for the day. For the moment, you will have individual stocks going in all directions, but I would think that maintaining a defensive posture would be a good position to take. Defensives, I mean pharma, FMCG, and IT may be on decline. I don't think the market is showing you know, momentum that is going to take you beyond 11,000 in a hurry. That should be it for the day. Take care, trade well, and please consult your financial advisor.